Great. Moving to thing number five. Now we're moving to Japan. Gary, thing number five, Bank of Japan raises rates.
All right. So yeah, here it is. They're the only major central bank in the world that's raising rates. So
Yeah,
it's kind of
it's
funny,
like,
right?
wow.
They went from negative to a previous range of 0 to 0.1%. Now they raised to 0.25%. So,
Yeah.
people are up in arms here in the US. We've got a Fed funds rate that averages about 5.3%. Japan, their version of Fed funds rate is 0.25%. So, very, very low. Um, but there are 2 points to make. First of all, let's talk about the carry trade, because it's confusing for a lot of people. But what's happening is pretty basic. For many years, Japan has had negative or zero interest rates, and so or if you look out further, their 5 year, their 10 year, they've traded at very low yields. So what people do is they short Japanese government bonds, and in doing so, they're effectively shorting the yen, and they take on a very small amount of interest expense. And then they take the proceeds from that and they buy dollars, and that strengthens the dollar against the yen. And then they take those dollars and they buy, say, US government securities, which are yielding much higher levels. And so they book that difference between the yields. And assuming that they don't get crushed on the exchange rate, they're basically booking risk-free profits. But that last part is the key thing, that assuming you don't get crushed on the exchange rate. So, we've talked about this. The yen slid from, a year and a half, 2 years ago, I think it was 102 to the dollar. Recently, just a couple of weeks ago, it was, I think, 161 to the dollar. That is a gigantic drop, about a 60% drop against the dollar in under 2 years. So, what happened now is Powell gets in front of the cameras and says, "Yeah, we're about to cut rates." And the Bank of Japan raises rates, and all of a sudden that carry trade starts to unwind. And people then start doing the opposite. So they're selling um the US Treasury securities. They're then selling those dollars and buying yen, and then using those yen to cover their short position in the Japanese government bonds. And all of that buying has pushed the exchange rate on the dollar yen to below 150. Right, I think it was trading below 148 the last time I looked, and it may be even lower now. And what that does is that causes people to have margin calls, right? Their bank calls them and says, you're losing money. And if you want to keep this position on, you can either sell part of the position, or alternatively, you have to give us more money. Well, nobody wants to do that. So they unwind part of their position. And when they do that, it you do another round of this. And that means more dollar selling and more yen buying. And so the yen strengthens. And so what we're witnessing right now is a huge unwind of this multi-trillion dollar yen carry trade that's existed for years. And, if the Bank of Japan were to hike rates a couple more times, and the US Federal Reserve, instead of cutting 25 basis points, were to cut 50 basis points, expect there to be more of that. The other thing that I would add, and Alex is the one who did the analysis on it, and I thought it was fantastic. Uh, Alex, you were showing how, even though the Japanese government blew out their budget, their debt to GDP is about 260% right now, which is roughly double the insane debt that we have here in the US. But because they have a slower growth rate in their economy, they're not getting much GDP help. And so, I'm looking at this chart that Alex sent over. And if we go back to Alex, where was this? I want to say 2007, 2008. The last time they had, positive rates, the GDP there was a little over 520. And so then they had a decade and a half of zero or negative rates. Now they're at 0.25%. And so after basically almost 2 decades of incredible stimulus government policy and massive government spending and running up huge debts, I'm looking on this chart right now, and their GDP is now in like the 545, 550 range. So basically, over almost 2 decades, they've gotten almost no growth, but run up huge debts. And this is, in my opinion, a great warning for us here in the United States, because one of the things we've talked about a lot is that our government spending is wasteful, that it destroys value. And so you can spend a lot and run up huge debts that you have to pay down the road and destroy your currency on the way to do it, and crushing the buying power of your citizens with inflation. But if the spending that you're doing is not producing value, if it's destroying value, then you're going to end up with the same problem Japan has, which is a lot of debt and a lot of inflation and a GDP that just isn't really going anywhere. And that's what's happened in Japan, and that's what we're risking here. Alex, does that make sense, or am I missing the point of your analysis here?
No, that makes perfect sense. And this chart is amazing, but I'd hate to take credit for it, as it was actually Andrew Brown
Oh, it
who
was Andrew
created.
who did this one.
Yeah, it was
All right.
Andrew, but it was a fantastic chart. I wish I could take the credit, but yeah.
Round of applause for Andrew. Andrew, this chart looks great. Great job, buddy. We'll
We'll
have to have
follow
you
up
on
with
our next
Andrew.
one. What's that?
Yeah. Yeah. We'll follow up with Andrew
I
next
know.
week.
Sorry about that.